Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I want to do actually something a little bit more generic, right? So I will not analyze a specific stock, but I want to talk about the situation in the stock market and why I do think, and actually it is what in my opinion is happening, that the stock market has changed. As I told you in previous videos, I don't know if you follow the channel or if you remember that, well, 2021 was not going to be as 2020, right? I think I made it pretty clear. So the stock market has changed. It will continue to be like that going on in the future, in my opinion. The question right now is how to invest in this particular market because, well, there is a thing. Maybe you have already years of experience previously, right? So before the pandemic happened and then boom, the bounce back. But if you're actually joined the stock market in this period of time where basically you were buying everything and you were making money no matter what you were buying, well, probably now things will be a little bit more complicated, okay, going on in the future. Everyone is a genius during a bull market, but when it comes to the real stock market, okay, so periods of sideways, periods of downtrends, and stuff like that, so the old boring stock market behavior, well, not everyone is a genius anymore, right? So in today's video I want to talk about how actually I am planning to continue to invest going on in the future. The only thing I ask you guys as always is please leave me another like, it's very important and I thank you for it, and subscribe to the channel so you don't miss any new updates. Let's begin. The major idea and investment philosophy behind this video is actually the idea of Peter Lynch, okay, one of the best investors actually ever existed in the financial world. Well, what he said back then is actually, in my opinion, still making a lot of sense in today's market. At the end of the video, I will also leave you some bits of an interview so that you can better understand actually directly from him what he meant. Alright guys, so let's say that you joined the stock market actually during April last year, okay, 2020. Wonderful period to actually finally go on and meet the stock market. 2020 will remain in history. Okay, now this is just the Nasdaq, but if you look at single stocks, we have returns that are mind-blowing. Okay, and you don't see this kind of stuff very often in the history. So 2020 will be in history books in terms of financial returns in the stock market. But what is the thing? 2020 has been something that we could consider an excess in statistics. If you have a data set, you will always find those kind of extreme numbers that are, you say, well, let's not include them in the average, okay, because otherwise is biased. And 2020, in my opinion, has been that kind of year. Something strange because everyone was at home, didn't have much to do, and then you will try to find other ways to make money, right? So go on and yeah, the stock market, it's the easiest way that I can do. You have Robinhood, you have all this kind of stuff, and then the government will also give money in the US, but also other countries as well. So everyone actually got involved in this, and we know the history, right? We know what's happened. Complete madness. We have seen obviously interesting stocks like Apple, Facebook, Google, all this kind of stuff that they have performed extremely well, but you know what? Their business actually was in line with the prices. And then what we have seen are a lot of hype stocks. On YouTube, actually, everyone was going on, coming crazy. Everyone was a genius. We saw, I don't know, everything, okay? From lots of EV, Nikola Motors. Then we have seen a lot of genomics stuff All right. So I remember when I was talking about Bionano saying that, guys, I don't know what they do. I don't like to invest in actually what I really don't understand. And I told you how it was very difficult to actually try to understand the fair price of the company because we don't know actually nothing. But the truth is that everything, literally everything, was going to the moon. So it was kind of very complicated to actually warn people that, well, it was pure madness. Okay, I tried to do it many times, but actually, I was the boring guy going on, everyone is making money, and that's it. But just 3, 4, 5 months later, it turns out that I was right. This is why I was trying to tell you before, because a lot of new investors, now this is just an example, but everything has gone on in that way. You go on here and say, for example, Virgin Galactic, and exactly the same has happened. And if you were going on make a video around here, this is just madness. Well, you were receiving lots of thumbs down and hate comments for saying that, but guess what happened, right? Same stuff we have seen with a lot of SPACs. Like literally every single SPAC out there has been busted. So as we can see, now we are in a situation where actually a lot of people, in my opinion, have lost money. I kind of see the enthusiasm finishing. On average, it kind of seems to me that during the last month, the hype on YouTube, let's say, has decreased a lot. But when it comes to see the indexes, actually the S&P is very near to all-time high, and the Nasdaq exactly the same stuff. But I am pretty sure that if you check the portfolios of the average investor out there, they have way underperformed the S&P, the Nasdaq, since basically January 2021. I'm 100% sure about that. Why is that? Well, simple. In the S&P, we see that it's almost at all-time high. But if you take a look at what stocks are actually influencing the S&P, you have, first of all, the FANG. Okay, so a huge chunk of the index is just because of Apple, Facebook, Microsoft, Google. This is what is moving the index, and all of them have literally done pretty well. We see Google, I did an analysis, actually very near to all-time high. Then we have Facebook over there as well, so all-time high once again. Look at that, Microsoft, they have done pretty well. So those are the kind of companies that are moving the index. But the problem is that no one really cares about those stocks, and everyone was focused into hype stocks. They have underperformed the S&P, and that's fair enough. Now, what is the thing? How do we continue going on in the future? Because in my opinion now is where actually who is really passionate about the stock market will remain and try to learn and try to actually understand how it works properly, but who came just during the pandemic, thought that just, I don't know, put 1,000 in it and become rich and get rich quick. Well, in my opinion, lots of those investors, they have already lost money, and in the next 3-4 months, when they realize that the market will not be like in 2020 anymore, they will just quit. And this is my prediction. I don't know, I can be wrong, but it's very likely they will go like that. So if you are actually interested in the stock market, what can you do? What can you do? Well, it's pretty simple. First of all, if you are new, actually, I would start to take this moment of, let's say, peace, right, where stocks are actually not going anywhere, to learn, right? So try to, if you like long-term investing, try to understand, try to read and get informed about fundamental analysis. Start with simple stuff. Do not overpay for courses. Just go online and try to understand how to read a balance sheet, how to do this kind of stuff, how to understand a business, and get passionate about it. And then when you understand those things, go on and try to understand the different types of valuations. Okay, so the competitors, so when you do with comparables, ratios, discounted free cash flows, so all this kind of stuff, try to get involved with those kind of stuff. In my opinion, the best thing that you can do is to have the knowledge to actually think with your mind. Because in 2020, lots of people, they just went on YouTube, find 5 minutes videos of a random guy saying that the new genomics blah 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 stock was gonna get them millionaire by tomorrow, and they just put money in it. But well, this is not how it works in the stock market, right? So in my opinion, do not rely on anyone. If you have the knowledge, you can do your own analysis, and that's it. That's the best thing you can do. So literally the best thing that you can probably do is to train yourself and actually take better informed decision with your mind, right? Because when you take decisions because someone else is saying you to do it, actually, yeah, everything is fine as long as, well, green days are here. But it's when a little bit of trouble comes and then negative trends or sideways moves that you really start to doubt your decisions, right? If you don't know why you bought a stock in the first place, actually it's very difficult to keep holding and take decisions where actually pain is coming. So in my opinion, if you are new to the market, now is the right time where you should literally learn and know why you're buying those kind of stocks and businesses in the first place. So everything I said in the video, actually you can find it in this particular interview of Peter Lynch. Now obviously what I said in the video is for today's environment, right? So 2021 with different technologies and stuff, and YouTube mainly, right, where you go on and find information. Now this interview from Peter Lynch actually was like 25-30 years ago. They didn't have YouTube back then, but basically he's saying exactly the same stuff. I suggest you actually to go on and take a look at it. It's just a 5 minutes video, but in my opinion is extremely interesting. I cannot upload it because of copyright. I'll leave the link down in the description. What Peter Lynch is pointing out is basically how, even back then, people were behaving with their money in different ways when it comes to buy something like a fridge, a car, or stuff like that, and then invest in stocks. When they had to buy a car or a fridge or whatever, they used to do lots of research. So try to learn everything about the model, the type, how many horsepower a car has, all these kind of features and stuff, as well as for a fridge, or if they had to go on vacation, they were trying to book a tour guide to know everything about the place. But when it comes to stocks, he points out how actually someone on the bus talks to you about something, and just 5 minutes and you put half of your life saving into that particular stock. So it's a little bit exaggerated, but in reality, if you think about that, it's not that exaggerated. Now in today's time, actually instead of a bus, we have like the random guy on YouTube, but the concept is still exactly the same. And he says because of that, actually the average investor, the beginner, is very likely to lose money. So overall guys, I think that if you really get passionate about something and you want to learn more about something, you will do great. Okay, I have no doubts about that. The only thing to avoid, in my opinion, as Peter Lynch said, is to take stocks as lottery tickets. It doesn't work like that. For a small percentage of people, well, it can happen that they get lucky, but overall, on average, you will end up losing money. So know what you own and think and take decisions with your mind is probably the best thing you can do in this field. So overall guys, I hope you find the video interesting, and leave me a like, leave me a comment below, actually tell me what you think about that. Subscribe to the channel if you want, and as always guys, have a wonderful day.